There's nothing magical about Sydney, so there's no way Sydney can defy marketing 101, which is supply and demand. If homes are oversupplied and demand is low, you're generally going to see a price fall. I don't think that's the case in Sydney though. So we are still seeing migration rates into Sydney are still very high. They haven't fallen away like we've seen in WA or to a lesser extent in Queensland. Interstate migration rates, even though they're still negative, they're at the highest levels we've seen on record, which is still quite a good story for Sydney and New South Wales. Supply levels, sure, they're moving higher and they're currently at record levels. Most of that supply, of course, is coming into the medium to high density sector, so apartment markets. We're not seeing a great deal of new supply coming into detached housing. And I think that's probably where we'll continue to see the highest rates of capital gain is in the house sector rather than apartments. You can see that clearly currently and historically. The capital gains for houses have well and truly outpaced that for units in both Sydney and Melbourne. It's going to take some time for the Perth marketplace to move through its correction and then start to recover. So we've seen dwelling values fall by 1% across the Perth market over the last 12 months, or the 14-15 financial year. And when you look at some of the dynamics in the Perth marketplace, we're seeing listing numbers are rising, rents are falling, yields are falling, population growth has completely fallen off a cliff. The state economy is softening. So I can't see any factors that are suggesting the Perth market's about to bottom out. So I think we will see a further fall in Perth values over the next financial year. When does the market bottom out? That's a hard question to answer. I simply don't know. But when it does bottom out, you'll probably find the market simply levels off, gives it time to see affordability improve, rental yields will start to improve as well. Supply levels in Perth have increased over the past 18 months or so, so we need to see the supply become absorbed as well. Well, Darwin's a marketplace that's dictated by the level of infrastructure and population growth that's happening in the marketplace. So we have seen some significant infrastructure development and investment going on in Darwin over, say, the past decade. We've seen a lot of natural gas facilities being constructed as well, and the Impex refinery, of course, is nearing its horizon for completion. So beyond that, there doesn't seem to be a great deal of new infrastructure proposed or to be on the cards for the Darwin marketplace. Sure, the market's diversified. It does still see population growth. It has a large government population and defence, of course, as well. And there's always going to be the production-based population that works in the natural gas sector as well. But I think what we've seen in Darwin over the past decade is annual growth of around the 7% mark or so, which is the strongest of any capital city. So it probably suggests that Darwin's growth run has been very strong, and it will take some time for that marketplace to move through its correction cycle and then start to eventually recover.